Guys, the biggest thing that happens in the technology industry is that things change so fast. And we as investors sometimes trick ourselves into thinking that we know what the future of this industry is going to look like. For example, everyone's aware of Roku. Not a lot of people realize that Alphabet, one of the most well-capitalized companies in the world, is now stepping into Roku's space. And that's not just Roku's space, but also Pluto's in trouble now as well, potentially. And so that's what I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Let's dive right into this one. This is a very interesting story, and it might end up changing the whole online TV viewing market as YouTube steps in. And of course, you guys know YouTube is owned by Alphabet. So here's the story as it was reported on the Wall Street Journal. YouTube is now testing out a new hub of free streaming channels. And of course, this will rival Roku, Fox in a fast growing area of streaming business. And so this is very interesting and also potentially very challenging for these companies because, guys, just because people are watching free channels streamed on YouTube doesn't mean that YouTube doesn't also have data on all of the streaming and all of the long form video content viewing and even the shorts viewing data or metadata on every one of the people that are streaming the content. And so YouTube really has a good idea of who you are, despite the fact that you're watching live TV. Now that's something that the other platforms may not necessarily have. They may not necessarily have that type of information. And so YouTube could actually target the viewer much better with better targeted ads, which of course would be in the video format. And of course they have their other formats as well, some ads under the screen, etc., etc. But the point that I'm making is that YouTube can be a very strong competitor in this space, and they can monetize in ways. And in other words, they can monetize in ways that are better by providing better targeting than what even the competitors can. So it's getting really scary as I see this for those other competitors. But as shareholders in Alphabet, this looks very promising. And so the article goes on to say YouTube is testing a new hub of free ad-supported streaming channels in a latest series of moves by the company to expand its ambitions in video. And I really think that they're doing a lot of good work trying to expand out the video. And so Alphabet is in talks with entertainment companies about featuring their shows and movies in the hub of cable-like channels and is testing the concept with a small number of media partners. I really hope that they get all the major TV networks in here, and also, major content providers like the UFC would be a good channel to have on YouTube. The WWE, of course, WWE I think has one of the largest YouTube subscriber count. The other area is they could just create themed channels, top YouTubers channels. So you'd have Mr. Beast and whoever else has PewDiePie and whoever else has large channels that could just be viewed on that one particular channel, and it's just live and it's always running. So you can do a lot of cool stuff with this. And so, adding a hub of free ad supported streaming TV channels, or FAST, is known in the media industry, would put competition with players such as Roku, Paramount's Pluto TV, and Fox Corp's Fox. I think, the bigger two competitors are really your Roku and your Paramount with Pluto. I think those are the guys crushing the business right now. So let's see how this plays out, but I just see a lot of bad news for Roku and Paramount in this situation. And Fox, it's some competition, but not necessarily the same type of competition that Roku and Paramount would serve to YouTube, or in fact YouTube would serve to them. Now, it's not just live cable TVs or live TV channels that YouTube is going into. Some of you guys might have missed it, but they actually inked a football deal with the NFL not that long ago. And so this is what I'm talking about. YouTube actually paid the NFL $2 billion a year, or has agreed to pay them $2 billion a year for NFL Sunday Ticket. And so and this is a 7-year deal, and so they're going to try and shift this onto YouTube. Now, I like YouTube doing more TV, live TV, especially live sports stuff, because I have a Chromecast at home, and a lot of my TVs just allow me to cast stuff on. the TV anyways. So it's really cool that my remote is just my YouTube app. And, you know, if I want to watch football, or, you know, I don't really watch a lot of sports, but, you know, if I have people over and I just want to throw some sports on, I can just go right into my YouTube app, see that there's a live game going on, and boom, it's right up on the screen. And so I really like the direction that they're going. They're going to capture an audience that normally wouldn't tune in, like myself. Even if like I'm just doing something random like cooking or something and I see there's a bunch of live sports channels, I can just throw something on. That'd be great. You know, I don't pay a lot of attention to boxing, but if there's a boxing fight on and it's live on YouTube, I would throw that on while I'm like making dinner or something. So you're going to just capture a larger audience that you otherwise wouldn't capture, and there's value in that. And so I think YouTube making this move, or Alphabet, you know, making this move is a good opportunity for us as investors to capture more revenue. And so just back to that article quickly, notice that a YouTube spokesperson said that the company is running a small experiment at the moment that lets a subset of viewers watch free ad-supported channels and is using it to gauge viewer interest. I just wonder how those ads are going to be sort of shown to them. Are they skippable ads, or you have to sit through them? So we'll see how this plays out. Now, people on YouTube are used to ads already, so it's probably not that big of an issue, and I think it works on YouTube. And remember, guys, I told you that, you know, YouTube is going to be an area that Alphabet will be very much focused on, as they had recent rough results. And if you guys don't know what I'm talking about, I did a full analysis of the quarterly results where YouTube did not do that well. But if you guys missed it, I'll just summarize it quickly for you. So recall, guys, that Google's shares, or Alphabet's shares, actually fell as YouTube and search ads took a hit, but it was really that YouTube segment. And here it is right here. You can see that there was a 2% decline compared to a 30% year-over-year CAGR growth rate. And so, of course, a lot of analysts were surprised at this. Even I was surprised at this. I thought YouTube was going to continue to grow out, but it's one of the reasons why people have lost a little bit of confidence in Alphabet, and it's one of the reasons why Alphabet is trading cheaper than other tech names at the moment. But, you know, I'm a strong believer in YouTube. I think it will come back. And so if you're going to invest in Alphabet, you really have to answer the question, can YouTube continue to build out? Here's the way I'm thinking about it. In 2022, they're going to finish the year at 0% growth. And I think part of that is just because YouTube is struggling because of the slowdown in ad spending. And ad spending is generally a leading indicator into a recession, but it also the first thing that picks up when we're kind of moving out of the recession. So I think, you know, you're probably going to get 0% growth in 2022. I think you might slow down to 10% growth in 2023. This might be a little bit optimistic, guys. So just take that with a grain of salt. This also might be 0 or negative, depending on how bad this year is, right? So, you know what? I actually might revise that after this video down to 0 as well. And then I might just bring this down to 5 and then go up to 15. But I think over the sort of like medium term and back into the long term, YouTube does recover. But just based on how I'm forecasting the company as a whole out right now, you can see that I'm growing the company at the lower double digits. Now, you know, of course, that might be a little bit optimistic in the short term, but it might be a little bit pessimistic in the long term. So you guys tell me how you're forecasting it out, and let me know how these segments are different in terms of growth rates. What I'm really interested in knowing is why or why not are you forecasting YouTube differently than the way that I'm forecasting this segment out. And then just jumping into the valuation, using a terminal multiple of 17.5 times earnings, I'm valuing Alphabet at approximately $130 per share. Compare that to the current share price, because the company did run up recently. You know, it was in that $80 per share, might have even gotten into that $70 per share. You know, the company's still somewhat cheap. It's trading at less than 75% of its intrinsic value, so it's not a bad purchase in this environment. And overall, you know, there aren't a lot of things that are cheap in this environment. You can see that right now for the tracker that the Patreons get access to at that lower tier of the Patreon, which is just that $5 tier. There's only 2 companies trading at under 50% of their intrinsic value. You guys know Alibaba is one of them. Actually, I don't think Alibaba is one of them anymore, but you know, you can see highlighted here that Alphabet is just one of a few companies of the more than 100 companies that is on the tracker right now that is trading under 75% of its intrinsic value. And so, you know, it's still part of a short list of companies that are relatively cheap. And, you know, these are the names that are probably going to do well in 2023. That's my opinion. But, you know, I haven't purchased shares in Alphabet just yet. I've kind of been greedy in this environment. So we'll see how this plays out. But, you know, I want to know what you guys think. Do you guys hold Alphabet in your portfolio? Moreover, do you hold Microsoft in your portfolio? Do you hold Tesla? Like, I want to know what you guys have. What are you guys thinking in terms of what stocks are going to do the best in the near term and, of course, medium term as well. But specifically, I'm thinking about 2023. Now, if you missed the recent video that I put out where I talked about how Tesla, there's analysts that are actually thinking, just because Tesla is beat up right now doesn't necessarily mean that you shouldn't be buying the securities. But I sort of like broke down that argument and just didn't agree with it. And if you want to just see how some of the bulls are talking about Tesla and why you should be buying it, you can actually see my rebuttal to that argument in this video right here.